The following program is paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395 is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.
You're listening to The Money Hour with your host, Tina Mitchell, sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to The Money Hour on 570 KVI, the Sunday, November 10th show. I'm Tina Mitchell, your host and mortgage expert. Thank you for taking time to talk money. I'm here every Sunday at 11 a.m. right here on 570 KVI. I'm dedicated to my listeners, providing you with the tools needed to make informed decisions on matters that can affect your money. And with tomorrow being Veterans Day, I wanted to thank all the men and women that have served our country, and both here at home and abroad. The men and women in the armed forces have went and did a job that the country is asking them to do. Sacrifices are made, and I just want to extend my thank you, and from the show The Money Hour, to all of you of our service members. If you see a soldier in an airport or at the mall or walking down the street, take time to shake their hand and say thank you. So again, thank you and happy Veterans Day to all of you. Guest in my lineup in studio today, Jeff Smoot with Highpoint Law Group, here to discuss the financial issues facing service members and our veterans. And also in studio, Jeff Prescott with RE/MAX Metro Realty, buying rental properties and ideas on how to start your real estate investment portfolio is what I'm going to talk to you about, Jeff, today. And also, I have a really special guest. She's from my company, Absolute Mortgage, and that's where I hang my license. And I do my mortgage loans for my full-time business, because all of you regular listeners know I just do this as a part-time hobby once a week here on Sundays. She's actually an underwriter, so it's a real privilege because as a consumer, you do not get a chance to talk to an underwriter. No email communication, no phone conversations. They're behind the scenes making all of the decisions on how to get you into a home and to definitely approve that mortgage if you're in a position to buy. So I'm really excited, and it's a real pleasure and a privilege to have her in studio. And we're actually going to focus on VA loans to kind of go on the theme of Veterans Day on Monday. So it'll be interesting and a great conversation with Megan. So if you do have a question, take down my phone number, 1-888-987-0570. Again, that's my show phone number, 1-888-987-0570. And that way you can personally talk to a VA underwriter. Wouldn't that be awesome? Or you can talk to my other great guest too, Jeff or Jeff, if there's any questions that you have, or you can go online at themoneyhour.com. And now it's time to just start out the show with a little money chat. And so let's just keep it on the theme of VA, but also compare some different loan programs, being that I am the mortgage expert, and that's my arena when it comes to money. It's a good conversation to kind of break out the different loan programs that are out there. And your main programs available are going to be your standard conventional financing. I say standard because that's just the secondary market where mortgages are getting traded through Fannie Mae and Freddie Mac. So your standard financing being conventional. And then government backed, and I guess I should say everything's government backed because the government took over Fannie Mae and Freddie Mac. But we also have FHA and, of course, VA, which is the loan program available for our veterans. So I wanted to do kind of a comparison between FHA, conventional, and VA financing. So let's first talk about down payment. VA, outside of USDA, which I'm not bringing into comparison for today, but other than USDA financing or down payment assistance programs, there are no options to get into a home for zero down. Unless you're eligible for VA or you're a veteran and have access to VA financing, then you can get into a house with zero down. So the comparison for that on an FHA loan, the minimum down payment is 3.5%. And on your conventional financing, there is 3%, but that actually is going away with all of the changes that are coming up with Fannie Mae and Freddie Mac, which make the guidelines on the secondary market that affect our conventional financing. So it's going to go to a minimum of 5% down payment. Now, on VA, FHA, and conventional, there's also maximum loan amounts, so the very maximum amount that you can borrow. On a VA financing, maximum loan amount is $506,000. If we're talking about in my local market right here, and that's what I'm going to talk about today, loan limits are going to change depending on the areas that you're purchasing in. But here in our market, $506,000. So that means you can buy a $500,000 home, a little bit more. $506,000 to be exact, on a VA loan with a zero down. So if you qualify and you can manage those payments, getting into a $500,000 home with a zero down loan, that's really an awesome opportunity because the cost of interest rates are so low right now. Now on FHA, a little bit more actually. You can go to a loan amount of $567,500 in our area here. So with the minimum 3.5% down payment, that would be a $588,000 home, rounding it down. Conventional financing at a 5% down payment, the maximum loan amount to do the minimum down payment in our market is $417,000. So a little bit less than what we talked about for VA and FHA. So what would that equal in a maximum purchase price with the minimum 5% down? Rounding down, $438,000 maximum purchase price. Still a pretty substantial, nice home, especially for first-time home buyers. And if you're going over a $417,000 loan amount, you can go up to $506,000, just like on VA, $506,000, but you need a 10% down payment versus the minimum 5%. The down payment can come from on a VA loan. It can be gifted for all your closing costs. If you have a down payment, if you're not using a down payment because of the zero down, then obviously you don't need gift funds there. On an FHA, everything can be gifted. And so if we compare that with conventional, you do need to have a minimum contribution, down payment on a conventional loan, just depending on qualifications through the different mortgage insurance companies. You should, in most situations, be able to get with a minimum 3% of your own gift funds, and the remainder has to be, 3% of your own funds, yes, and the remainder to the 5% could possibly be gift funds. Now, requirement for reserves. On a VA and an FHA loan, you don't have to have any money left over after closing. So it's pretty awesome. Would you want to have some money left over after closing? Yeah, I say you want to make sure you have a cushion about 6 months. That's probably the safest thing, but the lender's not going to require that. On a conventional financing, they're going to want to see that you have 2 months principal, interest, taxes, and insurance. So basically, your entire mortgage payment, 2 months worth of payments left over after closing to qualify for a conventional loan. Mortgage insurance, VA, the reason I think VA is just an awesome way to get into a home if you qualify is because of the fact of mortgage insurance. There is none. There's no monthly mortgage insurance. Now, there is a funding fee that's financed into the loan, but it makes a very minor difference on your payment, and what that funding fee is going to be is based on eligibility, down payment, and whether you're a first or second time user of your VA financing. So it's going to range anywhere from 1.5% to 3.3%. On FHA, very expensive monthly mortgage insurance, 1.35% of your loan amount divided by 12 months. It's really expensive. Plus, on top of that, it has an upfront mortgage insurance premium that's financed in, so you've got both. Now, here's the really negative thing with FHA. It's for the life of the loan. So conventional financing is great because there's a lot of different options. I've talked about it in studio before. You can pay monthly mortgage insurance. You can completely buy it out. You can do a split or a combination between the two. Not enough time to break it out here today in studio, but it's a really great way and creative. Now, I want to talk about interest rates. On FHA and FHA and VA, the interest rates are much lower than conventional. You can see 1/4 to 0.5% lower interest rate on FHA and VA financing. On VA, that's awesome because the mortgage insurance, there is no monthly. So that just makes everything better as far as the mortgage payment is going to be substantially less on VA than FHA. On conventional, even though the FHA rate is a lot lower because of the cost of mortgage insurance, conventional is going to be better financing. I tell you, there's never enough time. I've got my engineer over here timing me, and I'm going to have to go to break here in a second. So I'm just going to wrap this up and give you my last feedback on the programs. VA is an excellent way to get into a home. The only challenge you're going to have as a veteran in VA financing is your multiple offer situations right now in this market. It's really unfortunate the seller's not looking at the fact that it's one of our veterans and giving you the house if it's a comparable price. Unfortunately, that's not the way it happens. When they see a VA or even an FHA in comparison to conventional on a multiple offer or a multiple offer scenario on these homes, the conventional financing is going to win out if if all said and done, it's the same net price. So call me if you have any questions. Again, pick up the phone, call the show at 1-888-987-0570. Again, 1-888-987-0570, or online at themoneyhour.com. And coming up next on the Money Hour, we have Jeff Smoot, and Jeff's going to talk about some challenges that you might have as a veteran when it comes to some of your debt, and some creative ways, so you definitely will not want to miss out if you have family members or loved ones that are VA or veterans. Take a listen, make sure you take notes, because it's an awesome segment coming up next right here after this short break on 570 KVI.
When buying or selling a home, give yourself the assurance of expert guidance from a seasoned realtor. Jeff Prescott of the Prescott Group has experienced many business cycles in the Puget Sound real estate market and offers a wealth of creative ideas and information for his clients. Jeff's consultations can help you envision different options during your property search. For a seller, there are always opportunities to maximize the selling price of a home. Put the Prescott Group to work for you.
This is Jeff Prescott with RE/MAX Metro Realty. I can be reached at 206-271-2855 or visit my website at sheltertrends.com.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com, or call 800-865-9005 to get your free site assessment from Solterra Systems.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KVI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I'm empowering our community, providing you with opportunities and solutions when it comes to your money. And in studio right now, second time in studio, wealth of information, Jeff Smoot with Highpoint Law Group. Serving our country, sacrifices have to be made, and additional stress is added as well. When it comes to debt, there's some solutions if you have some debt problems. And so that's why I've invited Jeff into studio. So Jeff, thanks for coming back.
Thanks for having me back, Tina.
Yeah. Jeff worked his way up through legal profession, from weekend mail clerk at Seattle firm in 1984 to founding member of Highpoint Law Group in 2013. He became an attorney in 2007 after more than 18 years working as a litigation and bankruptcy paralegal, and opened his own firm, Highpoint Law Group, in 2013. Jeff's practice is primarily focused on representing individuals and small business owners who are suffering from financial distress, as well as creditors in bankruptcy and receivership cases. He also assists individual and small business owners in formulating and implementing strategies to minimize liability. That sounds like it'd be better, Jeff, right? We want to minimize?
Yes.
Okay. Minimize little liability, and let's go ahead and protect the assets as well. So, Jeff, thank you again for coming in, and really, really excited on the theme of Veterans Day to talk about how you can help them. So, military members are required by the Uniform Code of Military Justice to pay their debts, but in the real world, that isn't always possible. So, what are some options that they can do, Jeff?
Well, first, I want to echo your sentiments and say thank you to our service members and veterans for the great job that they do. And it is a difficult job serving our country, and financially it can also be very difficult, especially when people are deployed and uprooted very often, sent away to serve the country for long periods of time, leaving their families behind. Somewhat to fend for themselves. Yeah. And so just like other Americans, veterans and active service members can struggle with debt and financial issues, and it can be difficult to manage bills while serving. And military spouses and families often suffer financially when their loved ones are deployed. It's difficult to pay the mortgage, rent. Sometimes they're in a lease and they get shipped across the country or out of the country. And so it can be very challenging. So, imagine if you had to move every year or 9 months.
You couldn't even imagine it.
It would be really hard financially to do that. Yeah. And so it is a challenge. And I want to say something. Military members are sometimes targets of sort of shady practices. Because the Code of Military Justice requires that they pay their debts, they can be targeted by lenders or credit card companies while they're serving. Before they get deployed, they will get the offer with the check that you just sign this check, go cash it, the money's yours, pay us back later. Well, they get deployed, and as soon as they come back, they get a demand saying pay us back now, and they're required to pay it back now under the Code of Military Justice. So that can be a problem, and they'd be threatened with reporting that to their commander if they didn't do it.
That is unbelievable. And it's unbelievable that whenever there's an opportunity to target a group, unfortunately that happens. So what would happen if they were reported, Jeff?
Well, it's possible, depending on what the debt was, they could be threatened with losing or not getting a security clearance. And security clearances are very important to members of the military. Approximately half of U.S. service members have some form of security clearance. And financial issues, debt issues, and failure to manage debt properly is one of the leading reasons why service members would be denied or have their security clearance revoked.
So this could be a major problem, Jeff.
Yes, it is. And there's a large number. There were some statistics published in 2012 that nearly 36,000 active service members sought financial counseling because their security clearances were at risk because of their debt problems. And the statistical report also showed that the average debt-to-income ratio of those service members was approaching 50%. And a debt load of 35% or less is considered healthy. So these service members who were approaching 50% debt to income ratio were in dire financial difficulties, and that was threatening their security clearances. So they're going to, there's going to be a possibility of having the financial difficulties. So you're saying that it is going to affect the service member security clearances? It could. Again, I said that financial problems and failure to manage debt is one of the leading reasons why a security clearance could be denied or revoked. Okay. But it's not necessarily going to do that. They're going to look at what caused the debt. Was it a medical emergency, a one-time event? Or was it merely just failure to pay debts, just running up debts and not paying them? Was it just mismanagement, negligence, indifference, or was there just a hardship that could be explained that would be the reason for that? So kind of like we would see with our underwriter in studio, it's kind of a common sense. If it wasn't because of something that they strategically decided to do, then that's a different scenario. So what about bankruptcy, Jeff? Is that an option? Absolutely. Okay. Service members can file bankruptcy, and it doesn't necessarily mean absolutely that their security clearance would be at risk because of the bankruptcy. They're going to look again at the underlying cause of what led to the bankruptcy, and if it is a case where it was just sheer indifference or negligence, running up debt and not repaying it and not caring, then that would likely result in the loss of the security clearance. It could even lead to loss of an assignment or a discharge. So why is that so important? Well, as we know, people have been leaking secrets. And the rationale is people who are in financial difficulties and need money are more likely to leak secrets in exchange for money than people who are managing their finances or are owning up to their financial issues, bringing them to the attention of their commanding officer and trying to get some counseling and deal with them. So I know people are giving away secrets. Edward Snowden and Bradley Manning have just been giving them away because of their crusade, but there's a real risk that people will leak secrets, and leaking of secrets in the military can have real consequences, not only for national security, but if the word gets out that something is going to be happening, it can cost real, threatened lives. Of course. So what should a service member do to take care of their financial problems? Well, pretty much the same things that everyone else should do. If they're having financial trouble, they should seek debt management counseling, and there are a number of government agencies or reputable nonprofit agencies that are out there to help veterans and service members with their debt problems. Preparing and living on a budget is important for everyone, especially for people who are having financial difficulties. Making the minimum payments so you don't fall behind on the debts that you have to make your situation worse. Check your credit report and dispute any erroneous information and get that cleaned up. for military service members, documenting your efforts to manage your debt is important, and you really should keep the chain of command informed. That's probably the most important thing for active service members, because if you're keeping your debt problems a secret from your commanding officer, they might wonder what other secrets you're keeping.
Sure. So what laws are in effect that can help service members with their debt problems?
Well,
Let's talk about that.
Sure. The main law in effect is the Service Members Civil Relief Act, the SCRA, and that's a federal law that provides protections for military service members who are entering active duty. It originally started as the Soldiers and Sailors Civil Relief Act of 1940 that started right before World War II, or right as World War II got started. And it actually goes back farther to the Civil War, when Congress passed the moratorium on any actions brought against Union soldiers and sailors. The SCRA is like that, but it covers a lot more.
So what does the SCRA cover?
For mortgages, service members can get their interest rate lowered, and it prevents foreclosure for up to 9 months after deployment.
Okay.
For rental agreements, it gives service members who receive a permanent change of station or who are deployed to a new location for 90 days or more the right to terminate their lease without any penalty. It prevents evictions while the service member is on active duty, if that's due to non-payment of rent.
Okay.
Credit card interest rates are lowered to 6%, and the portion of interest above 6% is permanently forgiven, and you can reduce the amount of the payment while you're on the active duty.
Okay.
But this only applies to debts that were incurred prior to military service. So if you had the scenario where people are in the service and they're about to be deployed and they get a credit card, it's not going to apply to that.
Not going to cover, okay.
Right. Collection lawsuits, you can't get a default judgment against an active service member because they're not there, and that's why they can't come and defend.
Makes sense.
So if a default judgment is entered, it will be vacated when they come back and ask for that to happen. And it prevents foreclosure while they're on active duty and for up to 9 months after they return.
So who actually enforces this, Jeff?
Well, the Department of Justice primarily is the enforcer for the SCRA, but government agencies tend to be busy, and sometimes they're not there for us when they go on furlough. But private attorneys can also enforce the SCRA.
Okay.
If a military service member was deployed, and I'd say there's real life examples where the lender failed to reduce the interest rate on a second mortgage when the service member was demobilized, he sued the lender because they hadn't reduced the mortgage rate. That's a violation of the SCRA and the Washington Consumer Protection Act. So they can get damages, attorney fees, and in some cases even punitive damages.
So having the right representation and knowing what to do is obviously important.
Sure.
Yeah. What about what should a veteran do? So let's talk about veterans.
Sure. Veterans have financial problems too. Often they can't find work. They don't know how to present their military job skills in the civilian market.
Okay.
They may have medical issues. They might be dealing with physical or emotional issues that make their money issues seem worse. And so maybe they haven't managed their finances properly. So they do things that a lot of people do. They try to borrow their way out of debt. They gamble. They ignore their debt problems hoping they'll go away. They don't. The VA can help. There are several veteran service organizations, vet centers available to assist them. The VA offers loans to veterans, but VA loans are also loans that need to be repaid, so they need to be make sure that they need and can repay those loans and not fall behind, because if the VA can tap any other federal benefits that they have coming to repay the VA loans, including GI Bill financial assistance for college tuition. And it's happened many times that the veteran is surprised to find that their student loans on the GI Bill have been taken by the Veterans Administration, leaving them unable to continue with or finish their education under the GI Bill. So again, it's important for veterans to manage their finances and not fall into too much debt, which isn't always an easy thing for veterans to do in this economy.
So what are some other resources, Jeff, for veterans?
Well, again, the VA is the primary resource. There are veteran centers and several veterans service organizations that are accredited. Three that I've found here: the National Association of American Veterans, the U.S. Soldiers Foundation, and usacares.org are three places that veterans can go to look for assistance with financial issues.
Awesome, Jeff. Thank you so much for coming back in studio. What a great segment and what a great addition to today's show for our veterans and service members out there.
Oh, it's my pleasure. Thank you, Tina.
And if you do want to talk to Jeff, pick up the phone, call the show, 1-888-987-0570. Again, that's 1-888-987-0570, or online at themoneyhour.com. Coming up next on The Money Hour, what would your life be like if you had more than enough money coming in each day by simply just waking up? Well, real estate, it can actually do this for you. It's the only investment that you can have someone else pay for. Learn how with my next guest in studio, Jeff Prescott, RE/MAX Metro Realty, right here on 570 KVI after this short break.
Free electricity from your roof? It's possible with solar energy. Here's Amy from Solterra Systems.
There's never been a better time to install solar in Washington, and yes, we do get enough sun. Incentives cover over 50% of the installation cost, and zero down financing is available. Enjoy watching your meter run backwards this summer by installing solar now.
Go to useyourroof.com to find out how easy it can be. That's useyourroof.com, or call 800-865-9005 to get your free site assessment from Solterra Systems.
Do you worry about making your next mortgage payment or saving your home from foreclosure? If so, you should consult an attorney. Highpoint Law Group helps individuals and small business owners turn financial distress into financial success. Call Highpoint Law Group today.
Hi, this is Jeff Smoot with Highpoint Law Group. You can reach me at 206-999-8375 or by email at jeff@highpointlawgroup.com. That is 206-999-8375 or email jeff@highpointlawgroup.com.
Highpoint Law Group is a debt relief agency helping people file for bankruptcy relief under the Bankruptcy Code.
This is The Money Hour with your host, Tina Mitchell, on Talk Radio 570 KVI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell. My goal is to keep you up to date on the latest news and trends happening right here in our local economy. Keep me tuned in, and I will keep you informed on everything that's happening relating to your money. And in studio, next guest, Jeff Prescott with RE/MAX Metro Realty. Investing in real estate most likely won't produce the get-rich-quick results promised by some of the late-night infomercials that we hear, but it can be one of the best investments in your portfolio done right, and it can be a great way to build wealth and build a lot of wealth. And so I'm really excited to share this information with our listeners today. Jeff, thank you for coming back in studio once again.
It is my pleasure each and every time.
Just like a regular contributor over there.
I want a chair with my name on it.
I was just thinking I was thinking to have something going down your mic there that says Prescott. So I'll do a surprise for you next time you're in studio. Those of you that have not heard Jeff, because he has been in many times, Jeff moved from Portland to Seattle in 1986. He arrived without a job, and friends suggested getting into the real estate business. And so licensed, that's exactly what he did. A year later in 1987, we're talking a long time ago, 1987, earned Rookie of the Year his first year in real estate. Now with RE/MAX Metro, Jeff has over 25 years of experience, a little bit more than I do, Jeff.
Just a little.
Just a little bit. He's worked through many economic cycles in his career and is committed to making our housing stock increasingly efficient and energy use of repurposing existing materials used for new homes. Jeff regularly provides consultations for clients on ways to update their home, take advantage of new technologies, and maximize their return on investment. So, Jeff, really excited to have you in studio and very excited for the topic that we're going to talk about, because you know how passionate I am about real estate.
Much, yes.
And we need to really fill that entire goods place. And if you're thinking of where to start, I think real estate is a good place to start, and investment property is a way to really build. So I'm excited about this topic here. So, Jeff, let's go ahead and start out. If somebody's purchasing an investment property and they're looking at a condo, because that's a good price range maybe to start as a first-time investor, what are some things that you would caution or tip on when renting out a condo to a renter?
Cash flow would be a big one,
Okay.
and that would be certainly in consultation with you and what their mortgage may or may not be at the time. But some of the added thing with a condo will be the homeowner's dues.
Yes.
That can be very handy, is now you have a lot of the maintenance of your unit is being taken care of by someone else.
Yes.
But it is taking a chunk of your monthly cash flow. So that would be a big one. And also location. Is that condo in a place where people would want to be?
Okay. Yep. And also when it comes to the homeowners association as well, that there's a lot of things that you have to be cautious of a condo versus single family home. Is that correct?
Absolutely. Are there any upcoming assessments?
Okay.
How's the maintenance been? What's their paperwork? And you get to review all of that at a time of purchase.
Okay.
And I'm very experienced with going over those sorts of things that might show or indicate there's something to be cautious about.
Exactly. And yeah, because you do a lot of condo purchases, and especially right here in our great area in the Seattle market.
Oh, yeah. Seattle's got a very strong market right now.
They definitely do. And so, Jeff, what is any other difference with your single family home versus your condo that you would advise?
Well, on the single family home, you're doing the maintenance yourself. So you're aware of what's going on. And personally, I look at whether it's convenient for me. If I'm going to have a single family and I have a rental turnover, is it going to be easy to get to?
Okay.
If occasional those water pipes might go, is it nearby? And do you have someone to contact that can take care of that in a quick and affordable way?
Of course. So we know it's a little different in this market since the crisis in 2008. There's no more zero down options to buy investment properties. There are if you're going to live in it, but not investment. So you're needing a 20% down payment in most situations. So multifamily is a really, really good investment purchase when you're looking at rentals. But if you don't have that, you're buying a higher price in multifamily, which means that 20% down is even, more expensive. But if somebody has that, what are some great things about the multifamily versus a single family unit?
I think one of the great benefits of having a building with more than one unit in it is you lessen the chance that you're going to have a month with no income.
Okay, yeah.
People do move out, and to have multiple units with cash flow coming in, when that one tenant should leave, you still have cash flow coming through. Maintenance of the building can be amortized over more units.
Okay.
Still have to have a roof.
Some tax benefits.
Or
there.
even roof maintenance that you can have more access of.
Oh, yes. Yeah, it makes sense.
The building.
Okay. All right.
Care of the building.
So, Jeff, on multifamily, here's another creative thing, me being on the mortgage side of it, because the biggest challenge that I think somebody would have in the investment, because if you want to build your real estate portfolio and that investment, that second one is that down payment. But we talked about FHA and VA when I did the mortgage minutes today. And on FHA, you've got your 3.5% down if you're going to live in it. And for our veterans, they can do the zero down if they live in it. So multifamily, they can live in one unit, and then at the same time they're getting their primary. So what do you think about that?
I think it's a wonderful idea.
Pretty awesome, yeah.
Perfect idea. And many people already have a place or a space in their home that could become a rental space.
Okay.
So they may be living in their income property already.
And you talk to a lot of your clients that are wanting to get into rental properties and can't. So why don't you expand on that a little bit?
Myself, I've got a sizable home and
beautiful home.
Realize that my basement is very underutilized. And looking at the area around me, there's a very high demand. And it took me 5 years to finally get it that, my gosh, I have a housing solution right below me and potentially could end up paying for my house for me. So I'm very excited to I've started that process right now of getting my basement into a legal apartment.
Okay. And yeah, what a great idea. And how many people don't use that space, especially in these Seattle homes? Now, more in the, in my neck of the woods on the east side, you got a basement, and the basement's the man cave. But here there's a lot of unused basements in the Seattle market.
Very much so. Mine was just storing stuff that should have been at the dump a long time ago. So to convert that into
I don't remember
space,
that when I was over there. It wasn't that bad. I do remember being at your nice kitchen table and having that tea, though. So
and And the lovely
with a
view.
beautiful view. Yeah. So what are some tips? Oh, go ahead, Jeff.
Go
I'm
ahead.
sorry.
No,
Nope. So what are some tips on when we're talking about doing improvements on things that could be a good investment with the least amount and have a great return for someone? What would those be?
Well, I'm taking into consideration for my place ease of cleaning and maintenance between tenants. Mm-hmm. Have always been for whether a personal residence or rental to have a solid surface floor, easy to clean, solid surface countertops, same reason.
Sure.
And also I want it to be a safe place. So in my situation, I have to add a legal egress window. My basement window is a little on the high side. So I'll be digging out the well and making a window that's legal, because I do want it safe for the people that are my tenants.
Sure.
And there are some zoning that Seattle and Bellevue, all the cities have. Okay. And there's a number of those things to be aware of.
Sure.
Seattle, for example, it can't exceed 1,000 square feet. We do have an option in town in Seattle that for an ADU, auxiliary dwelling unit.
Okay.
For a DADU, which is detached.
Oh, I haven't heard of that. Okay, yes.
That could be over a garage or even a separate building. Bellevue, by the way, does not. It must be part of the main building.
Okay.
And its size ranges from 300 square feet to 800 square feet.
Got it.
One thing about Bellevue I thought was interesting is you can't have a home business if you have an ADU in your building.
Really?
Yeah, I found that surprising.
Huh. So, Jeff, and I know you work with a lot of buyers as well in educating on the opportunity for vacation rentals. And I thought that's a really good creative way to get in as well.
Awesome. Mm-hmm. And there are a number of ways to market those, from having a personal website up to some national chain ones. Personally, I use VRBO, Vacation Rental by Owner. It's quite a large one. And I'm lucky enough to be in a part of Seattle that has a very high demand for vacation rentals. And
so your basement can be a vacation rental, and it could be depending on So
for $1,500 a month for a rent month to month, or $135 a night.
Yeah, wow.
And for example, right now in Seattle, there are 460 rentals available on some of these sites. Bellevue has 21, Vashon 46, Leavenworth 201. There's a lot of people out there that already have second homes that may be empty a lot of the time.
Wow, and they're maybe not even thinking about the opportunity to get that income. So it just depends on what your strategy and what your needs are. But whether you're doing here, or you're actually doing a vacation home that you can actually enjoy when you're getting out of our area, but then renting it out when you're not enjoying it with your family yourself. So what about locations, Jeff? When we're talking about vacation rentals, I know here there's some spots. What are some other suggestions that you have?
Well, Capitol Hill has 58 that are up there, ranging pretty high. Bellevue tends to be, it looks like executive style, large homes, and often they have minimum stay requirements where I might be at my place have people who would want to stay a night or two.
Okay.
And up to a week, that happens. But Bellevue seems to, as contrast, have people minimum stay requirements of about a week or more.
Oh, wow.
So it all depends on where you're at and what the what's available that people would want to see.
Got it. So, Jeff, what about some tips on the vacation rentals? Obviously, we're talking about turnover. So how do you minimize the cost and the effort for your vacation rental?
And that, again, is back to those solid surfaces. They're so much easier to clean and sterilize even than a carpet or a rug. So I'm very strong on everything being a solid surface. Same with the countertops, bathrooms, etc. There's also services out there that will do cleaning between stays that can range at about $160.
Okay.
And for that could really factor in quite well.
Yeah.
Or do it yourself.
Okay. All right. So again, if you want to talk to second Jeff in studio today, pick up the phone, give my show a call, 1-888-987-0570. Again, it's 1-888-987-0570, or online at themoneyhour.com. Any of your real estate needs. The reason I have Jeff in studio so much is because he's your guy. He's just awesome, and highly encouraged to give him a call if you have any real estate questions. And coming up next in the Money Hour, the U.S. Department of Veteran Affairs Home Loan Guarantee Program enables eligible borrowers to apply for a VA loan, to buy a home, or even refinance your existing loan. It is one of the best mortgage finances options out there, I think. And so I got just the person to talk about it. Megan Batch, underwriter with my own company that I'm licensed with, Absolute Mortgage, and the company I work for. So excited to have her here, right here on 570 KVI after this short break.
Do you worry about making your next mortgage payment or saving your home from foreclosure? If so, you should consult an attorney. Highpoint Law Group helps individuals and small business owners turn financial distress into financial success. Call Highpoint Law Group today.
Hi, this is Jeff Smoot with Highpoint Law Group. You can reach me at 206-999-8375 or by email at jeff@highpointlawgroup.com. That is 206-999-8375 or email jeff@highpointlawgroup.com.
Highpoint Law Group is a debt relief agency helping people file for bankruptcy relief under the Bankruptcy Code. When buying or selling a home, give yourself the assurance of expert guidance from a seasoned realtor. Jeff Prescott of the Prescott Group has experienced many business cycles in the Puget Sound real estate market and offers a wealth of creative ideas and information for his clients. Jeff's consultations can help you envision different options during your property search. For a seller, there are always opportunities to maximize the selling price of a home. Put the Prescott Group to work for you.
This is Jeff Prescott with RE/MAX Metro Realty. I can be reached at 206-271-2855 or visit my website at sheltertrends.com.
This is the Money Hour with your host, Tina Mitchell, on Talk Radio 570 KVI. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell. I provide you with news on everything money, fresh information on market trends and conditions of our local economy. And in studio right now, just a real pleasure because she's part of the company that I work for. As all of my regular listeners, you know that I do mortgages for a living, and I work at Absolute Mortgage. And Megan Batch, she's actually one of our underwriters. Just brought her on board with the company in July of this year, but she has 13 years experience in the mortgage industry. And as I said earlier in the show for the lineup for our guest, as a consumer, if you're out there buying a home, you can't talk with an underwriter. There's no email communication with your underwriter. There's no phone conversation with the underwriter. They're on the back end, and you're just getting to talk with me on the sales end. So I'm happy to actually bring in the person that makes the decisions on the financing and helps actually approve the mortgages. And Megan, I'm just so excited to have you here. So thank you.
Thank you. I'm happy to be here.
Yeah, taking her in on a Sunday. And I tell you, they work long hours during the week. And so it's nice for them not to have to work on the weekends. But here she is. So we're going to stay on the theme with veterans and talk about VA financing, which I've said earlier today. It's just an awesome way to get into to a home. And what a better way to talk about it with a seasoned underwriter. So Megan, what is a VA guaranteed home loan?
Well, it's a loan that's provided for our service members. Mm-hmm. It's a benefit that they've earned, and private lenders provide these loans like banks and mortgage companies.
Okay, yeah, and we do a lot of them over at our company. Not as much as down in maybe the south end, but we do see some of them here over on the east side in Seattle. So, Megan, as an underwriter, outside of the benefits of, I talked earlier about the mortgage insurance and how VA financing doesn't have to pay that, which is a huge benefit as far as the mortgage payment, and then coming in with zero down. On the underwriting side, is there anything else that you see that's a real benefit of the program?
No, not really. I mean, we really just want to be there to support the service members. So,
awesome.
That's what we're there for.
Yep. Yeah. So to have those programs for them.
Mm-hmm.
And where do you see the biggest difference between a VA loan versus some of the other finance options out there?
It is just that they're service member only loans.
Okay.
Not for everybody, just for those who have earned it.
Okay. And so the appraisal process, Megan, because there's a little bit difference in some fashion between your conventional financing appraisals versus FHA and VA. So where do you see some of the highlights of VA appraisal that would be different than like an FHA or even a conventional?
Well, they're actually pretty close to FHA. They basically follow the HUD requirements.
Okay.
So they're pretty much the same as the FHAs. They're a little bit different than the conventionals in that there's more requirements and checks in place, that we have to look for, so that the veteran knows the property better. So, because VA can't actually guarantee the property that they buy.
Okay.
So they have us that they've vetted to review the property, to make sure that the best we can anyway, to make sure it's satisfactory and that it's a reasonable value for the market. Sorry.
Makes sense. And when I was talking earlier, Megan, about in a multiple offer situation, and you don't see this on the underwriting side, but I do on the sales side and working on the front end, is in a multiple offer situation when you have a VA competing, especially next to a conventional, the agent that's representing the seller is, if everything else is even, is encouraging to go with the conventional buyer. And one of the main reasons is because of the VA, and not necessarily that there's an issue with the home, but just not having control of the standard appraisal process and going VA, and also having to use the VA appraisers, because unfortunately sometimes there's a little bit of delay in that process, for that. So Megan, what about the entitlement? So there's the $36,000 for entitlement. Can you talk about that a little bit to my listeners?
Sure. That is the VA guaranteeing that the amount to the lender.
Okay.
So in the event of a foreclosure or a short sale, then they will give that to the lender to protect them.
So if they did foreclose on their home, VA is going to get back the $36,000.
Yeah, and that's actually not a set amount. So that amount can actually be greater depending on your loan amount, and right now it depends on what county you live in.
Okay.
So it can be higher than the 125%.
Of the 36,000. Okay. And what about the certificate of eligibility? I always tell VA buyers the first thing that, we need to get the certificate of eligibility. Can you talk about that, Megan, and what that is used for?
Sure. The certificate of eligibility shows the veteran and the lender how much entitlement the service member has. And that can actually be obtained by the veteran online or by your lender. Okay.
So, Megan, the VA loan, it's through the government or the lender?
It's through a private mortgage company. So it is through a lender or a bank. Yeah.
Okay. So when calculating income for a VA loan, you can only use the veterans, and this is a lot of times they don't know this, but if you're married, you can use your spouse's income. But if they're going in with a significant other or a partner and they're not married, then that income cannot be utilized for qualifying for that loan, correct?
No, you can use the income, but that's when the entitlement amount changes.
Okay, so and how would that, then it's affecting them being able to do that zero down loan?
That's right. Yeah, they'll actually have to make a down payment in that case. Yeah.
So that's where you're in calculating with your debt to income ratio, and you need that additional income. That's where the challenge comes in. If you're using other income that's not attached to an actual spouse, is going to affect the down payment. So Megan, what can a VA not do?
Well, they can't guarantee the condition of the property.
Okay.
So that's why the appraisals actually are a little more difficult to do, is because they have those vetted people to review the properties.
Okay.
Because they can't guarantee them.
All right. And VA is not acting as any legal service for them either, right?
That's right.
Okay. And let's talk about if for some reason the veteran dies before the loan is paid off, will VA guarantee the payoff and the balance of that loan?
No, they won't. You would need to actually get private mortgage insurance for that.
Okay, so private mortgage insurance, not the
Like
private mortgage.
individual.
Exactly.
Yes.
Okay, so you're going outside of the loan and securing a different type of mortgage insurance that's going to take care of that, and that would be the same insurance that you'd be using if you were using any other type of financing as well.
That's correct.
And wanted it paid off, because mortgage insurance does, on a standard year FHA or conventional financing, does not insure. In that situation, it's just insuring against the default. So that mortgage insurance.
Yeah, it's insurance for the lender, not for the borrower.
Okay. And can you talk about the VA funding fee and what the purpose of that is, Megan?
Sure. The funding fee reduces the loan's cost to taxpayers, considering that a VA doesn't require any down payment, and it doesn't have any monthly mortgage insurance, so that doesn't go back either. It's a percentage of the loan amount, and it really depends on what military category you are, and if you've used your VA benefit before, or if you're a first-time user, and whether or not you make a down payment, which you touched on earlier.
And so regardless of that VA funding fee, if it's 1% or 1.5%, I think it's the low end, or if it goes up to 3.30, which is the high end, and that's when you're actually using your VA financing for a second time around and doing the low down payment. Even at that, the difference that it makes in your mortgage payment is just a few dollars a month. So it's really, really minor.
Absolutely,
and a lot lower impact than that FHA financing, where you're paying that monthly at 1.35% of the loan amount. Pretty substantial.
And of course, in some instances, it is waived. So
that's true for if you're disabled. Yes,
that's right.
That's a good point, Megan. So you don't hear a lot about assumable loans, or at least I don't, and I don't know why, because it's such, especially in this interest rate environment when we've hit historical low interest rates over and over and again. And even though we've seen a little bit of increase in the interest rates, they're still overall historically low. With VA, these are assumable loans, correct?
Yes, they
so
are.
Can you talk about that and share that with our VA listeners?
Well, since our company doesn't actually do the assumable loans, the assumability loans, then, I don't have a lot of current experience with them. But I know that they're much more cost effective than doing a loan in a conventional manner, as far as going to your mortgage company and getting a loan that way. So
if you're looking at, Megan is talking on the side of actually as a buyer, of a veteran coming in and assuming someone else's loan in this market. Us as a mortgage company, the mortgage companies are not doing that. It's the mortgage company that's holding the mortgage for that veteran. But if you're buying right now as a VA buyer and coming in, this can be a huge benefit in using VA financing when you go to sell your home, because then you're able to market that as you have this assumable loan, and the assumable loan has to be another veteran. So you're marketing your house veteran to veteran. And maybe when you sell your home 5-7 years from now, the interest rates are 8% and you've got an assumable loan at maybe a 4.25%. What a huge benefit that you're going to have over all the other sellers out there selling their home, right?
Yes.
And I'm just surprised people don't talk about that more often. And if a veteran, Megan, is listening and considering a short sale or a possible foreclosure, I know there's ramifications. What are those?
Yeah. So if they actually have a current VA loan and they're going to be short selling or foreclosing on that property, whatever amount the VA is not able to recover or loses from the short sale or foreclosure, it'll be negated from the total amount of entitlement. And so that affects their future VA loans that they might want to do. So outside of the standard, it affects everything credit,
you're doing. That's
right.
in addition. And what role does VA play, Megan, after the loan actually closes?
They don't play a huge role. It's usually just with the lender, doing servicing and stuff like that, unless there's something that occurs, if a default occurs or something like that.
Okay.
Yeah.
So, Megan, as the market, we've seen some recovery, a lot of recovery, especially here in our local market in the Seattle area. And so there's a lot of conversations going on with homeowners now again about home equity line of credit, and hopefully you're not taking home equity line of credits out to pay off debt that you're going to incur and rack back up, because that's what happened when the crisis happened, is you had this equity in your home, so you're paying off revolving debt, and then you're going back out and using the revolving debt again to buy the boat or whatever. So hopefully that's not the case, but if you're strategically doing it for a good reason, or if you're doing it to better the value of your home for selling. But what about for VA in home equity line of credit?
There's actually no limitation for as far as, your percentage restriction of your loan amounts that you can have. But again, with lenders, whoever you're trying to get your loan through, they're going to have limitations on that.
Oh, quite, of course. So if that's something you're interested in, you want to, definitely look into that. And Megan, I, just like with the other guests, we never have enough time to get through all of our information, but it's just really awesome having you in studio. And thank you so much for sharing your wealth of knowledge with all of my listeners. I'm going to look at you a little bit different back at the office behind the desk now that I've had you in studio. So thank you to everyone out there for listening again. This is your host and mortgage expert, Tina Mitchell, signing off for the day. I don't know what I'm going to do with the rest of my Sunday, but I hope you guys enjoy. And I want to thank you again for being here every week. I'll be here next week, same time, same place, right here on 570 KVI. Have a great weekend, you guys.
Are you behind on your mortgage payments and unsure about the road ahead? Magnum Law Group helps families just like yours navigate through the foreclosure avoidance process. Are you underwater on your home and unsure what to do? Magnum Law Group will help you understand your options. Are you facing foreclosure and need to stop a trustee sale? Magnum Law Group has success in doing this and may be able to help you too. If you're tired of dealing with the banks and getting turned down for loan modification, Magnum Law Group will take on the banks for you and lead you through the process for the best possible outcome. They lead the competition with superior knowledge and expertise.
This is Craig from Magnum. You can reach us at 425-605-6393 or at www.magnumlawgroup.com. See you at the next seminar.
The preceding program was paid for by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Absolute Mortgage Company, NMLS number 81395 and Washington CL number 81395, is an equal opportunity housing lender. Tina Mitchell, MLO number 145420, is a licensed loan originator with Absolute Mortgage. Visit absoluteloans.com or call 888-90-HOMES for cost information.